Nothing in this podcast is intended as investment advice, and the people in this podcast may hold positions in the stocks they talk about. Do not buy any investment based solely on a tip or recommendation. Please do your own research.
Hello, welcome to the Sunday Roast. It's Sunday the 1st of February. I'm Phil Carroll.
Where did January go? And I'm Kevin Hornsby.
January's been a toffsy and turnsy. It's been too long already. I'm Charles Archer.
January, honestly, it can do one. I know Kev's, you can hear my voice. Kev's turned this week to be ill, coughing and feeling a little bit under the weather.
You guys passed it to me through the screen, I think.
Yeah, absolutely. We did say last week that you were a picture of health, and then, sure enough, you were struck down with it as well. So, I feel like I'm falling to bits at the moment, but not a good week. News stories that have dominated. We've got a lot to unpack this week, but Iran, Trump, again, can we have a week, like you said, Kev, where Trump doesn't dominate the headlines? Starting with Iran this week, the rhetoric has sharply escalated, with Trump openly threatening military action unless Tehran agrees a nuclear deal. Trump insisted that there must be no nuclear weapons and warned that if Iran refuses, the next attack will be far worse than previous US strikes. He framed the threat in unmistakable terms, saying the US is ready, willing, and able to rapidly fulfill its mission with speed and violence if necessary. Iranian officials responded by saying that they are prepared with their fingers on the trigger and would respond to any aggression immediately and powerfully. Behind the brinksmanship, ordinary Iranians describe sanctions and economic collapse so severe that some openly say they have little left to lose, highlighting just how fragile the situation has become. Discuss.
Wow, let's it's January, right?
Sorry,
you go.
Rubbish what we're talking about. So I almost think, something's going to happen. Either Iran is going to step down or the US are going to launch some sort of strike, and it's not going to be pretty, and I don't really want to even think about it.
I think, I was a Venezuela specialist 2 or 3 weeks ago.
You were a specialist, yeah.
And last week I was a Greenland specialist. Well, actually, I'm a Greenland specialist. This week I think I'll be an Iran specialist. Yeah. I think it's only been 4 weeks this year. It feels
Let's consult our favourite internet armchair expert, Charles Archer, on Iran politics.
It's quite fun, isn't it? It's just. I think this is the problem, though, right? Like, you don't actually ever bloody know what Trump is going to do. It's swoop into Venezuela, steal the president. No one really knows, actually. No one cares anymore, if you think about it. 2 weeks ago, it was all the news. No one really cares what's going on in Venezuela anymore. Trump says, I might take Greenland by military force. Then he rules it out. And then, the US is going to continue to I'm a Danish, and the Europeans are going to continue to pour money into Greenland. But actually, it's no longer the headline news anymore. Yeah. Now Iran is headline news. And, it might be that, without being flippant, because it's awful the people living there, it might be that the US takes actions over the weekend, as they like to do, and then by Monday morning it's over, or alternatively it becomes a bigger problem. The Strait of Hormuz closes and the oil price goes to the moon. We don't know.
Which is possible.
Well, I mean, they can try.
Who had on their bingo card at the start of 2026? Venezuelan president kidnapped by the US. Greenland, basically, you better sell it to us or else. Iran war. Gold at 5,500. Silver in the fantasy market even hit 118, and in the real market it's like 135, I think.
It hit 121 in the paper market.
Yeah.
Did anybody have any of those 5 things on their bingo card?
Well, we talked about gold and silver going up. Greenland for some reason, Trump likes to talk about it every January, so I kind of assumed that was going to happen. We did it last January and the one before. So, to be honest, it's great, easy trade, by the way. Next January 2027, free money on the table. But Iran has been going on in the background forever. Venezuela, I think, is the interesting one, because people go, it's for all the oil, it's for the oil. And it's like, and then the oil executives went up to the White House and they were like, we can't get this shit out of the ground. It's not going to happen. Yeah. And then Trump went, I'm not interested anymore. I swear. I feel like, they should, I don't know what they should do with him, because he has no, his attention span is, I swear, he's got ADHD. This is what it feels like, but with nuclear bombs and world power.
Yeah, not a good Well, who did he describe, or what situation did he describe as being very dangerous this week?
Mr. Starmer going to China.
Yeah, it was about the UK strengthening economic ties with Beijing. I mean, and added it was even more dangerous for Canada as well, concluding flatly that you can't look at China as the answer. To me, that's screaming jealousy. The fact that the UK and the Canada, that these trade deals have been discussed and strengthening the ties. It's like, well, if I can't do it, no one else can.
Well, I think it's fine because despite all of the bullshit between the US and China, this trade just goes up and up and up every year between the two countries because they're the largest economies in the world. And I think it's as a general rule in terms of the world being safe, the more trade that is done between countries, the less likely they are to start fighting each other. So it can only be a good thing.
I saw some statistics about the US imported more Russian uranium than all the rest of the countries in the entire world combined last year. So how did that avoid all the sanctions and all the you cannot trade with Russia?
Well, because it's convenient. It's basically it's the same with like the oil stuff, right? Like, oh, we're not going to buy Russian oil. So Russia will sell the oil to the Indians, the guys in the Middle East, and then we just buy it from them at a premium for some reason.
Yeah.
It's the whole system is the global system of it is just ridiculous. In exactly the same. I mean, it reminds me a bit of during the pandemic days, right? And they decided, all right, we've got to go down for these massive lockdowns, but we're not going to stop planes or ships from coming into the country with as many people as you like. It's the most mental thing in the world, and it's we have the same logic now.
Front page today, Charles, is UK set to deport asylum seekers to war-torn Syria in migrant crackdown. So that's the new one. Is Syria's back on the agenda?
Oh, well, I think. Well, I don't know. I think the
Syria for February then.
Yeah.
The asylum seeker migrant thing is this is the problem, right? Is that it's the system for the modern world just doesn't work. It's as simple as that. The system we had post World War II, it needs to be updated, but nobody seems to be. I don't know. It's a political hot potatoes. No one seems to want to deal with it. That's not the UK across the world.
Kevin Warsh. If I said that name, what would it mean to you, Kevin Warsh?
Well, apparently he's going to be the next. Well, he's going to be named today. So potentially, when you listen to this on Sunday, it'll be confirmed. The next Federal Reserve governor. The markets are, gold is crashing, silver is crashing, paper markets anyway, because everybody's saying, "Wow, it's amazing. It's not going to be Hassett. We're going to have someone hawkish in the Federal Reserve." But he's not hawkish. All you need to do is look at how he's acted with Trump in charge in the past, but also look at CNBC interviews, look at the way he's spoken. The market is reacting because you're not going to have Hassett in there. But Walsh will be just as bad. And people don't realize this yet because you just kind of read what the headlines say and don't look into the detail. He is going to be just as bad. And when the rate cuts start up again, which I think will happen, you're going to see gold and silver rise, and you're going to see big problems with the US dollar again. The key thing for me with him is that instant market reaction. Obviously, everything's selling off. Once the market figures out what the actual state of play is going to be, it will just be back to the status quo we were before. So we'll see.
Enough Trump talk now. Let's move on to our first guest this week. We're delighted to welcome Charlie Long, CEO of Critical Mineral Resources, to the roast. Charlie, great to have you on.
Thank you.
So for listeners who may not know the story, you're developing the Akademia project in Morocco, where recent drilling has confirmed shallow copper mineralization that could be suitable for open pit mining, alongside an unexpected but very exciting shallow gold discovery. More recently, you've taken another step forward by commissioning your own diamond drill rig, which has already delivered its first core with visible copper mineralization. It feels like the project is moving quickly from exploration into a more controlled and accelerated phase. So let's unpack what you've got and where it's heading. So starting off, for listeners coming to this fresh, what exactly is Akademia? Where is it, and why do you think it stands out compared with other early stage copper projects?
So it is a sedimentary copper deposit in the Western Anti-Atlas in sort of central Morocco, or at least it looks like central Morocco to me. May not technically be central Morocco, but yeah, Western Anti-Atlas. It's about 250 kilometers inland from Agadir, but there's no sort of real relationship between Agadir and Akademia, apart from the name, which means store. I think it means store in either Arabic or Berber. So so it's a sedimentary copper deposit. We've also, as you sort of intimated there, we found some gold mineralization, but also this rhyolite mineralization, which has got good copper and silver grades in it. And the rhyolite at the moment we think is a different type of deposit to the sedimentary copper. So in a sense, although we don't know how big the rhyolite could be, we've got two projects in one. And then the gold is there. We don't understand it yet, although it's not obviously nice to have shallow gold. But we don't know whether it's going to be like a big system with lots of gold, which give us a third project, or whether we're just going to have, gold credits in the, in the copper concentrate that we're going to be producing in the future. So that's kind of a big part of it is that it's very shallow or near surface, and the actual type of sedimentary copper is probably unique to Morocco. It's not exactly comparable to anything else. There's a mine called Tizza, which is about 50 kilometers to the west, which is 130 million tons, about 0.9% copper with some silver, which they don't disclose. And so we know that in exactly the same rocks, they are exactly the same rocks. We have, or as exactly as you can get in geology, same age, same sediments, same part of the world, same mineralization, same types of minerals. That there's potential that we could have a Tizza size project at Akademia. The advantage of Akademia over Tizza is that Akademia is overall shallower because it's near surface pretty much everywhere in all our permits. Well, actually, in all our permits, it's shallow, which means that in terms of getting it into production and capex, it's really low capex. So that, I guess, that's the answer to your final question, is how we differ from other juniors, is that we're post discovery. It's a very shallow thing, and we can get it into production quite at a relatively low capex or at a low capex, and I think that's what's attractive, and that's what my job this year is to try and get people to understand, investors, potential investors, whoever, that having a shallow deposit is a complete game changer for the potential of a mining project like this. And that's not just the OPEX, because obviously it's cheaper to operate near surface than 300 meters underground, but it's also the capex.
Yeah.
And it also means that when you compare a drill result from a project which is 200 meters underground to one that's at surface, they're just completely not comparable. For example, VMS copper, where you might have some nice, let's say 10 meters at 3% copper with a gram gold, really nice looking stuff. But it could well be, and it very often is, just a sort of lode, which might be, I don't know, 500 meters from bottom to top, 5 meters wide and 300 meters long. It's like sort of, just a piece of mineralization deep underground. Once you've mined that out, you then spend most of your money doing another adit or another decline or another shaft to get to the next bit where you carry on mining. Well, when you're at surface, you mine your a patch of copper resources or reserves, and when that's done, you then just drive your equipment a few hundred meters along and you carry on mining elsewhere. So there's no sort of expensive reserve development capex, and that's a massive thing, because mining companies just look at the dividends of mining companies. Unless you're Rio Tinto or one of the other big sort of iron ore producers, they very rarely pay dividends, because most of their money gets spent on developing the next reserves or drilling out the next mine or making another acquisition, and the operating cash flow just never comes to shareholders. So I think we are unique in being very shallow, and yeah, that's kind of, as I said, my job this year is to try and sort of, I don't want to say educate because that sounds patronizing, but just help people understand that difference.
Yeah, and obviously the gold discovery is a big thing, with prices of gold all-time highs, 5,500 we saw just this week. Obviously it's cooled off a bit, but how does that gold discovery change the overall potential of the project?
I mean, I guess it depends on how much we find. What we think is that this rhyolite, which has got copper, silver, and a little bit of gold in it, could be the source of the copper that ended up in the sediments, and potentially that rock, that rhyolite mineralization, which is very, very old. It's pre-Cambrian, so it's older than the sediments, and it's sort of a billion years and older. It could be that that rhyolite is the source of copper in a lot of Morocco. And so, it came up back in those days in the Precambrian, and then was effectively weathered and leached and ended up getting incorporated into sedimentary rocks that came later in sort of sedimentary basins. And then probably you had sort of big tectonic events like the sort of when the Alps were built, for example, which was relatively recently. You had the same thing happening in Morocco. There was this big, they call it the Hercynian there. And at that point in time, you had remobilization of like hot fluids coming through the rhyolite, going along fractures and cracks and faults, and concentrating copper, and possibly at that point taking gold from the rhyolite and redepositing it somewhere else. And so we know there's gold, we know that it's been concentrated, or we think it's been concentrated in certain areas, but I can't stand here today and say, we're going to find a big gold mine, but of course it's possible, and we just have to drill and keep on drilling and see what the drill bit delivers.
Yeah, I think it was like 2.5 grams per ton over about 5 meter intersection from what I could
No,
see.
it was a meter. It was 2.5 over a meter, but we had
Okay.
4 or 5 intersects.
Okay.
And again, it's really shallow, so this is only like 20 meters underground, and that rock is worth, I don't know, $400-500 a ton. So you don't need much of it to make a lot of margin, whether you end up making gold doré, or you just get paid for your gold in your concentrate. You get paid in certainly Morocco, you get paid very well for any gold and silver in your concentrate. So it's definitely good, but I'm quite a conservative guy. I'm not gonna over exaggerate its importance, because we just need to do more drilling. But it's an unexpected thing, and certainly Akademia has given us unexpected things already, because primarily we were just looking for the sedimentary copper, and then we found the rhyolite, which is really nice, and some of it is at surface, and we're finding more of it, and then we found the gold. So it's very good to have a project where it provides that sort
Yeah.
of upside.
And you've made the decision to bring drilling in-house with your own diamond rig, which for a junior company, that's a big move. What does it give you in terms of cost control, speed and flexibility, and how important is that as you look towards defining a resource?
I think, yeah, I guess it's a big move in some ways, but it's not a big move if you're in Morocco and you meet the Moroccan, mining people, geological services people, our COO. Almost said my CEO, which I really hate. Our COO Nurdin, who's key man into the business, that's what he's been doing for his career, is managing drill programs and exploring for himself and for other companies. So, and there's a lot of drilling going on. Aya Gold and Silver is drilling a huge amount. OCP, the sort of big fertilizer company, is always drilling a lot. So there's a lot of both mining and geological services experience and skills in Morocco. So it's really not a big deal to just use that experience, especially since Nurdin, that's what he does. I think it's a bit different if you're in, I don't know, it depends where you are in the world, I suppose, but certainly in Morocco, it's not a big deal. And it just cuts the cost of drilling. It is expected to reduce the sort of downtime, because when you get contractor rigs, sometimes the rig's a little bit old and they might, break a bit. And we've had a few issues with our contractor rig as well. So it gives you flexibility. You don't have to pay to move it from A to B. So with your mining contract, your drilling contract, you'll have a cost per meter. But then if you say, actually, can we move this over there because we want to test that vein system, because we've got copper silver vein systems, which are very interesting. They'll charge you for moving it, 2 kilometers that way. So yeah, it gives us flexibility. It's a more powerful rig. It shouldn't be breaking down, and we have the skill set in Morocco to manage it. And actually, with this rig, we've had 3 drillers sort of come and get. We had a couple that we sort of asked to leave who didn't quite know how to run this type of rig, because it's a bit different to the rigs they were used to. And our current driller is a guy who's worked for a Canadian company and is used to these rigs, and he understands all the bits and pieces. So yeah, so that's kind of I guess that's the answer to your question, is that it's not a big deal for us. I mean, it would be for me, but not for Nurdin and his ecosystem in Morocco.
Very good. Charlie, tell me why Morocco?
Why Morocco?
And I mean more why Morocco for critical mineral resources? Why did it, or how did Morocco happen?
So, I mean, the honest story is that I was introduced to Morocco through a geological friend of mine in Zambia, a Zambian guy. He had done some work with Nurdin. The Cyprus assets weren't doing it for us for a number of reasons, and they were divested of. And at the same time, because you need to make sure that you always have assets as a as a small company. You don't want to become a shell. We were looking for, I was going into my network basically and looking for different projects around the world in different countries. And I went to Morocco, A, to meet Nurdin, and B, to see a manganese project, which was very interesting because there's quite manganese was it's always good if you can make a margin out of it. And met Nurdin and spent 2 weeks with him in the car driving around Morocco. Came back, shortly afterwards, and basically discovered that Morocco was full of opportunity, had was vastly underexplored, and yeah, went from there. So it's just for me, it's about bottom up primarily. It's about, is there the potential for like some new big discoveries in this country, in this geology, and then after that, it's actually Morocco is an amazing place to operate. Bottom up, I think, is the way you have to look at things in mining, but I'm not saying we would go to, I don't know, the Central African Republic. The country you're in, the jurisdiction is incredibly important, but the rocks are more important, because if you haven't got any copper or whatever you're looking for, there's no point.
So you came across this Agdia project with Norin, and just tell us the story of how that came about, and I suppose the position that you're now in. You've just raised a significant amount of money now to now
Yeah.
progress those projects. And
Yeah.
from what I read, there is the potential that this could be, I don't know, 3 times, 4 times, 5 times bigger than what you actually already know about. So tell us a little bit about that.
Yeah, so Nurdin started to show me around Morocco to lots of different projects, and he had some of which he'd put together, and some of which he controlled the promotion on. So there's a lot of mining projects in Morocco are owned by businessmen. Nurdin's one of the key guys in the industry, and some of them would go to him and say, "Can you try and find investment for this project?" So he's not the only person like that, but he's one of a few, and the best at it. And so we had fantastic deal flow, i.e., we were seeing lots of projects where local owners were looking to share the investment. And Akademia was one of the projects that we visited. It's one of the ones I visited in the first 6 months of going to Morocco, but it took us a couple of years to actually negotiate it and get it, as it were. And that's part of the challenge of operating in Morocco, is that the negotiation dance is quite, you have to be patient, and you need a local partner that can help you with that. But yeah, we've seen lots and lots and lots of projects, like probably dozens of projects. Nurdin's obviously seen more than me, and he just shows me the decent ones. And that's how it came about. And we continue to look at projects because although we have raised a lot of money and we're dedicating that to Agadir and acquisitions around Agadir, there are other things which look very interesting to us that are gonna, if we can secure them, gonna add a huge amount of value to CMR shareholders. So we're just trying to make money for shareholders, and we think we know what we're doing in doing that. So yeah, we continue to look at projects basically around Morocco.
So this project that you've got now, do you think some of the money is going to be used to forward that project to get it to a position where you can start the open pit and produce copper?
Yeah, so the money we've raised is mostly designed for drilling and getting to our maiden resource, starting the feasibility study, doing some pilot plant scale met work. We already have metallurgical test work, and it has about an 81% copper recovery and a 60% silver recovery. And the concentrate had gold in it as well. Some of the concentrates had gold in it. And so I think they did 10 different tests with different grind sizes and reagents and stuff like that. But we're gonna do proper bulk samples in a pilot plant. There's a lab in Marrakesh called AfriLab, which is amazing. He's got a pilot plant, a pilot flotation plant where we can put lots of material through, get the met work done. So we're starting the feasibility study straight away, and we'll have a maiden resource sort of mid-year. With the timing of that, it's like, could it be end of June? Could it be early July? End of Q2, early Q3. That's our target, and that will be sufficient to build a mine off the back of. And this is the thing about Morocco is versus some other countries where you look to develop things. There's all that expertise in country for building relatively small copper flotation plants, and we're very good friends with the main guy at AfriLab, who's ex-Managem, who has built lots of flotation plants and gold plants in all around Africa, Sudan, and places like that. And he will build us a plant, turnkey contract, commission it, potentially run it if we like. And then if that goes well, when it goes well, and when we build bigger resources, we can then build another one. And if we get bigger resources, then we can build another one. So our view on how to develop mining projects in Morocco is to use the local expertise and not go down the route where we drill this thing for like 3 years, have a massive resource, a huge feasibility study with like 500 million capex. We're not going to do that. We're going to basically bootstrap it, but with industrial scale, profitable, smaller mines or smaller processing plants, and then sort of build more of them if the
So you're going to have a modular structure then, basically, as you find the resources, you're going to go through that situation. Yeah. From that perspective, then, this maiden resource, from the presentation I read, what sort of size are you hoping to get to in terms of, copper?
I don't really want to say now. I think it depends on how many meters we drill and what happens with the drill bit.
Yep.
But big enough to start mining, but it won't be representative of the size of the resource, of the ultimate size of the resource. Because if you look at our deck, which is now on the website, we've got a dual strategy, we call it. So we've got the strategy to build this mine, a relatively small but industrial scale mine, a modest size mine, and then carry on drilling out the project. And in terms of or creating equity value, the most value will be created from drilling out the resource over time, and then some of the value, but still a lot, will come from the initial mine. And we don't need a huge amount of resources for the initial mine, and it will be that by May, when we've finished sort of doing the drilling for the resource, or maybe June if it's a bit delayed, we will only have drilled a few percent of the project.
Yeah.
So it will reflect, say 3-4% of the project area, not 100% of the project area. But
these modular systems that you've got, then how many tons per annum would go through those?
So if we started off at sort of 500-650 tons a day, then it's not a huge amount. It might be like 150-200,000 tons a year. If it's 1,000 tons a day, it's going to be 300,000 tons, maybe a bit more.
So we're talking about trying to aim for 1,500 to 2,000 tons of contained copper a year. That's somewhere in that situation.
Something like that, yeah. But we're looking. I mean, primarily we're looking to make money on that and get a good margin on that. So if we can get like a 50% margin, for example, or 40% margin, then it's a success. So
no, absolutely. If you can get a 50% margin on 2,000 at 14,000 copper at the minute, that's 280 million, and half of production, isn't it? Or is it 28 million?
No, it's 28 million. So,
okay.
But
there's 28 million and half of that. So that would create you 14 million free cash flow, which would then allow you to drill out the whole project, I presume.
Yeah, I mean, it depends on how on our average grade and what tonnage we ultimately go for. But I think, and in terms of generating cash to drill out, yes, that's the model. But who knows exactly what's going to happen in terms of how we finance that drilling? Because if the share price goes up a lot and we can raise a bit more money to accelerate drilling and prove out this bigger resource, then that's a decision that, the board and its larger shareholders and anyone that's interested can discuss and because for me the main thing is to add value, but that has to be reflected by equity value. And it might be that we want to be accelerating that drilling sooner than we start generating free cash flows. Because of course, if we start, building something in, let's say this time next year or sometime during H1 next year, which I think is a reasonable target, then it's going to take a while to build, and we want to carry on drilling. So I don't want to be pinned to things now, because I know things have changed. Some things are completely out of your hand. Some things are down to nature, in this case, geological nature. Some things are down to, permitting and regional government. So there's a lot of, and there's, God knows how many other potential, things that change your plans. But the main point is that we want to bootstrap it. We don't want to issue lots of equity. We don't want to do a massive capex thing which destroys all the equity and gives you loads of debt. And then you're just basically mining the project to pay back the debt, which is what most mining companies seem to do. So we have a different way of looking at mining, not just because we're in Morocco, but just as people. We want to be a business, not a sort of normal geological, geology driven exploration development, scoping study, PFS, BFS, project finance kind of almost part of that system. We're not really interested in that. We're just trying to make as much money as we can for our shareholders.
Yeah, I think it is interesting, isn't it? Because the analog that you have in your corporate deck is Tizert, right? And that started at a 1.1 million ton resource. Now that's grown to 130 million tons at 0.9% copper with silver credits. And of that 130 million tons, 100 million tons of them are measured and or indicated. Now the question is obviously you're 55 kilometers away with Akademia, roughly.
Yeah. Yeah.
Is that analog? Is that analog to, what you're hoping to eventually become, or is that included because the geology is very similar in your view?
So the geology is undeniably the same, as far as it's same mineralizations, mineral style, same age rocks, same sequence of rocks. So it's there's no question about its geological analog. And our senior geo worked at Tizert and knows, he's a professor of geology, but not like a really old professor. He's sort of,
Young. No. I'm a mile from the Cameron School of Mines where I live. So yeah, not
Okay,
everyone's 85.
yeah, exactly. But he's fantastic, and I wouldn't say he's commercial. Nurdine's incredibly commercial, which is so important. It's good to have like a blend of people, but he worked at Tizzer, and if you take him to our project, which obviously he's been to many times, and including one of the acquisitions we're going to be making this year, he goes, it's exactement la même que Tizzer, exactement la même, and you
The
can
French
see,
is, oh no.
yeah. So there is no doubt in our minds about the analog. In terms of its scale, obviously we'd love to have another Tizzer or something better. And this sounds like a cop out, but until we've drilled it, we actually don't know. And I mean, what I can say is that one of these, one of our permits that we're going to be acquiring has a bit more of a Tizzer style expression at surface, which is quite thick mineralization that you can see. And you can see exactly the sort of sequence of rocks that you have at Tizzer, with the basal conglomerate or the conglomerate de Basse, and then the petit calcaire and the and mineralized units of rock. And that's exactly the same as what you have at Tizzer, but we're 50 kilometers away. But so what? That's not really a big distance in 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 the world of geology. And then in terms of the scale, obviously we want it to be bigger and better than Tizert, but that's
years away
in the
potentially.
hands of the geological gods.
Indeed, indeed. Well, I mean, the idea obviously is kind of funny because the AIM market in general, the small cap market in general, has sort of, in my mind, it's moved away from trying to develop like massive resources and trying to sell it to a major. A lot of companies now are starting out with pilot mines because they've realized that pricing justifies it. But in terms of, I mean, the fast track development, you're looking for 650 to 1,000 tons per day, so very reasonable. If you're building, say it all goes to plan, you find the copper you're looking for, and you do the mineralogical studies, and it's processable, etc., etc. In terms of building that copper flotation plant, how simple does that flow sheet look? Is it quite simple to get it up and running? Would you say?
Yeah, so the other thing about the analog is that the metallurgy is the same as at Tizert.
Mm,
And actually, there's loads of mines in that anti-Atlas region that are very similar and related, and potentially it's a quite a big copper belt that is just yet to be established.
uncovered. Yeah.
But the metallurgy is very similar, and therefore there's no problems on that front. As I said, we've had 80% recovery with the copper. We expect it to be close to 85 with some optimization. In terms of the sort of, I would never call it a pilot plant. So if you travel around Morocco and you see these different industrial mines, they're still big mines, like even 500 tons a day. It's a proper flotation
Yeah,
plant.
yeah. No, I know. I know.
And it makes money, and they make money. So that's not, it's not pilot. It's modest industrial scale. And the thing is that they know what they're doing, and they've built lots of these things, and you're just using that expertise, and then using nerding to try and get that cost down. And actually, I've got mates in Southern Africa, and that you can get a Chinese built flotation plant, 500 tons a day for less than $1 million. I mean, that doesn't include earthworks and tailings, and it wouldn't include filter press to recycle your water, and that, so it's going to be more than that, but they're not expensive. And then if you then go to a bigger scale, so you're doing 3,000 tons a day or four or five,
Yeah.
and I believe that Tizat's probably the first metal mine in Morocco where they've gone Western with foreign consultants, and big equipment from that you have to order specially. You end up spending so much money on consultants, on their travel, on insurance, on studies and capex, that actually you have the opposite of economies of scale. You don't have lower capital intensity when you have a big operation.
Yeah, you need
You
to
have more capital intensity.
you need to be big enough basically for those economies of scale to actually scale up. And often if
Yeah,
you're a smaller
yeah,
company, it actually hurts you. I mean, it's yeah, I've had this conversation many times with lots of small cap companies on this podcast. And I mean, it is funny though, because with the metals pricing where it is, gold is around $5,000. It's bouncing up and down. Copper is at record highs. We did a couple of companies going into production with similar kind of small scale plants where the gold credits are actually covering the cost of OPEX now, you know? So, whereas, a couple of years ago, they might have things that's slightly nice to have. And
yeah, yeah. No,
I
I
guess
mean,
when you're looking at your
yeah,
timeline, you've got that maiden resource in June, feasibility and permitting in December, potentially a construction decision later this year. So
yeah. I mean,
there's a lot going on.
yeah. There's a lot going on, and before that, milestone wise, we'll get the mining license for the mining side. We'll need a permit for the processing plant towards the end of the year, and that's the element that's in the hands of the regional government. But that's kind of those two things. You've got the feasibility study, which we'll do. So AfriLab can do our feasibility study for us. We will have separate mining studies, processing plant studies, all the different studies that will come together. And we'll probably then use one of the smaller South African but very practical, experienced mining consultancies to just sort of sense check it. And
Hmm.
we're not going to, so you could almost call it like an internal feasibility study, but it won't be. It will be proper mining people that do stuff who are going to sort of both in Morocco and in Southern Africa that are going to make sure that all the numbers are correct. And that's important as well, because we're not just sort of giving it to another consultancy and not sure how good quality the underlying guy is that's doing it, who might be using mining costs and processing costs from some database somewhere, but we're going to be using people in Morocco that are doing it now. So I've been with Nurdin, and he's picked up the phone to ask a mate if his that's mining underground, what his mining cost per ton is, and 10 seconds later we have an answer. So we've got lots of resources in terms of costs in the country, but we're going to use someone to sense check that because we're PLC. But all this stuff can be done. It doesn't need to be like hugely complicated and involving lots of consultants. We're trying to be productive.
Keep it tight. Keep it. Yeah.
No. And also just our approach to Morocco is, how are people making money in Morocco in mining? Well, fertilizers are with the country. There is a gold is being discovered. There's obviously new regions in the south, which is now, Moroccan Sahara has now been recognized. So there's quite a lot of potential down there. And I think there's gold down there for sure. And it's near Mauritania where there's gold. But basically now people are making money out of barite trading, selling a lot of barite to places like West Africa and to the States for their onshore drilling mainly. There's manganese. There's a few good manganese mines. There's quite a lot of not very good ones and dangerous underground mining. There's obviously copper and copper flotation. So when we look at Morocco, we're like, okay, those are the places and there's obviously history of silver, and Aya is silver, and there was which was an amazing silver mine, which is kind of sort of the end of its life, but maybe getting resurrected as we speak. But those are the areas that people are mainly making money for in mining. And for us, we're like, well, we want to make a mining company and make money in mining in Morocco. So we look at all those things. We've looked at manganese, we're always looking at barite, but trying to get barite trading finance is kind of a little bit difficult. Manganese, if we found something that was safe and high grade and good quality, we'd look at it. I mean, now obviously we're focused on Akademia, but my point is that we're just trying to make money and be a business, and that's the key thing. Not going to drill out a big resource and have a big feasibility and then do a big PFS and then a big BFS. That's not really of interest.
All sounds very exciting, Charlie. And obviously, first time on the road. So I guess the question on everyone's lips is, what is the perfect or go-to Sunday roast in the Long household?
It's probably, I'm actually tonight. Now, this gives the wrong impression because this is a special occasion. I've got a Wagyu picanha.
Ooh,
There's a farm in the UK that has a Wagyu herd. I forget the name, Wyford or something. So I've got a Wagyu picanha, which I'll do on one of those ceramic barbecues. And then I've just got Yorkshire puddings, chips out of the freezer, Yorkshire puddings out of the freezer, gravy from the supermarket, and some broccoli. So it's kind of really easy, but really nice.
That's a cracking one. I do like the Wagyu, and the picanha is nice. But would you have some horseradish? I mean, you've got gravy, but would you have a bit of horseradish with it? I mean, Kev will normally ask this one. Kev, what's your favourite horseradish?
Well,
So,
are we creamed horseradish, or we blow your head off horseradish? This is
probably not creamed, but also sometimes they're a bit too vinegary. And then mustard, I do like and this might not be the right thing, but just you make your own mustard with water, which is like blow your head off. So yeah, those are the two condiments for me. I'm not massively keen on vinegar. I do like French mustard with chips, hot French mustard, but basically, yeah, either hot French mustard, make your own English mustard, good horseradish, gravy.
Perfect.
sounds delicious.
All gravy. So we'll say Charlie Long, CEO of Critical Mineral Resources. Thanks very much for appearing on the podcast.
It's a pleasure. Thank you all.
Okay, let's have a look at some of the movers and shakers of the week. The best riser was Empyrean Energy, up some 200% after they reached a binding settlement with Conrad Asia Energy. resolving its long-running cash call dispute over the Mako gas field in Indonesia and removing future direct funding obligations. Under the agreement, Empyrean retains economic exposure via an SPV structure, while project finance now covers development through to first gas, targeted for Q4 2027. The settlement clears a major overhang, stabilizes the balance sheet, and allows management to refocus on adding further low-risk assets. So, great news for Empyrean. Georgina Energy up some 160%. They confirmed that Harlequin Energy will fully fund drilling on the Hussar EP513 prospect under a non-dilutive structured offtake agreement supported by a $25 million facility. Harlequin will finance all site works and the Hussar 2 well, engaging Schlumberger alongside Aztec well construction, with drilling targeted for 2026 following preparatory works through Q1 to Q3. So good news on Georgina. Kendrick as well, up some 77%. A good week for Kendrick. We obviously spoke to Colin Bird last week. Any thoughts on the moves there?
Well, Charles wrote a very, very good article, and the asset looks absolutely splendid, basically. And it's still less than 2 million market capitalization. So I think that's why it's gone up so much.
Yeah, option over the rare earth licenses in Namibia.
What says you, Charles, having written about it?
Yeah, I mean they are early stage, so you have to be careful with what you're investing in. But then the market capitalization of a company is about 2 carrots and a potato, even after the rise. So you're getting some good value, but the potential there for that to be a seriously high quality rare earth asset, it is there. And for investors like us, people like me who like to take positions when the share price is very low, as it was a week ago, it's a good opportunity. Simple as that, really. Buy some shares, just sit tight for a couple of years. Easy.
Yeah, I don't think there's any doubt. You said it in the article. They do need cash, but I don't think that that's going to be a huge raise initially. And, if the project gets the approval, then it is going to be worth a few £1 million more, you would imagine.
No, let's hope so.
Okay, Astrid Intelligence up some 30% on the week.
Yes, get in there. Astrid Intelligence, superb. If you want to be involved in Tau, bit and saw network, Astrid Intelligence is the way to play it. They're going to be owning the picks and shovels. In my view, it's a great play. Has Tau itself. Tau's not done very well, by the way, this week, but I think that's not the important factor. The important factor is they're going to be earning more and more and more Tau from their subnet and the investments they're going to be making in all the other subnets. They've got 10 deals to announce, which haven't been announced yet. They're waiting for the financials to come out to then announce those things. I'm a big proponent. I think it's going to do exceptionally well.
Indeed. Well, I think Tau business in general is probably, just a personal opinion, I think it's probably going to be one of the big winners of cryptocurrency over the next few years. But we shall see.
Landor Resources saw a good RNS this week related to an updated mineral resource estimate at Junior Lake. We caught up with them in the week, and this is what they had to say.
They were joined by the leadership team from Landor Resources Limited, here to talk through their updated 2026 mineral resource estimate and strategic outlook at the Junior Lake property in northwestern Ontario. Last week, Landor released a significant RNS detailing an updated independent mineral resource estimate for their flagship BAM Gold project produced by SLR Consulting. Although the headline ounces sit below prior figures, the updated MRE reflects a CIM-compliant optimized pit shell basis, giving the market higher confidence in geological continuity and economics. Alongside BAM, refreshed resource work has been completed on the B47 and VW nickel copper cobalt PGE deposits, highlighting broader value across the Junior Lake property. Management has also laid out next steps, from continued infill sampling and new drill targeting to a large-scale soil and outcrop program. All strategic options are under review. Further exploration, partnership structures, and even partial or full monetization of the asset are being considered. Alexander and Glenn, welcome to the midweek takeaway. How's things?
Yeah, they're great. Thanks very much, Phil. I really appreciate that introduction. And yeah, it's very excited to be here and tell you about Landor Resources.
Yeah, thanks, Phil, from Glenn.
Absolutely, yeah. So, Alexander, as CEO, you've emphasised confidence and de-risking over headline ounces following that updated BAM MRE. Can you unpack that for investors who may be focusing first as the raw figures?
Yeah, look, I think the most important thing here is it's a very exciting new greenstone belt that we've discovered north of Lake Nipigon. The project's evolved from a nickel project into a gold discovery back in 2017. And we've refined the original global resource that was defined now into an optimized pit MRE, which is in its second phase. When I took over as CEO, I initiated a technical review of all the work, and we've got a 656,000 ounce resource, which is 95% of that sits in the indicated category. So very good confidence, and we think we only just got started.
Absolutely. And Glenn, given your experience on the board, how do you see the updated resource reshaping the strategic value of the project, whether as a development play or as a potential asset for partnership or sale?
Yeah, probably both, Phil. As Alex said, the important thing is the old quality rather than quantity, which I sort of abide to in most parts of life. And you could have a bigger resource, but if it's inferred ounces, it's cheap ounces. This has been done by SLR Consulting, the resource, very conservative tier one consulting firm in Canada. So people know it's real. People that are looking at us from a corporate deal point of view know the numbers are real. It's a base case, and it's all upside from there.
Very good. So, Glenn, Alex, you boys are not British, are you? Where are you from?
I'm originally South African, so yeah. No,
okay, so we have
colonials in Australia.
Southern Hemisphere people here. Whereabouts in South Africa are you from, Alex?
The best place, Cape Town.
Okay. So now I know why we're meeting in Lundava. So you have a house in Cape Town or not? Not anymore.
No, my parents are still there, and obviously, I grew up there 21 years in Cape Town, did my undergraduate there, so and then became a global nomad.
Yeah, it must have been a really hard place to grow up. Mind you, we won't talk about apartheid and stuff, but Cape Town's a very beautiful place, regardless of what's happening. And whereabouts are you from, Glenn?
Well, I'm in the second Cape Town because it's full of bloody South Africans in Perth.
And that's all because they're mining gold out there, or what?
Yeah. And the lawyers, as Alex knows, Alex spends a lot of time in Perth as well, and it's similar in lifestyle, climate, sort of culture, mentality. They just talk a bit funny, that's all.
Yeah, and when you go to Perth, everybody says, "Oh, I know a good South African."
That's what we say.
Okay, so going back to your project then, Wham Bam, thank you, ma'am, in Ontario, Canada. I mean, what other projects are in this greenstone? I want people to understand what a greenstone belt is all about in Canada, because this is sort of part of the concept that people think need to get. What's in these belts, how prolific are these belts, etc., etc.
Look, I think everybody who understands Canadian gold is very familiar with the Akademia, kind of, let's say, further east. Where we are, it's a new greenstone belt. So the nearest operating mine is Equinox's Greenstone, which is a significant mine just outside Geraldton. So that's about 100 kilometers to the east of us. To the south, we've got a number of operators as well. We've got Impala, Gold 2X are getting, getting good results out of their Moss project as well. So there are a few guys working on other greenstone belts near us, but on our actual greenstone ourselves, we've got the full district effectively within the junior lake. So we've got 45, almost 50 kilometers of strike along this orogenic belt, and it's got a number of great structural targets in it, and BAM is just one of those.
So the BAM thing itself, are we in a situation where this is literally only gold, or are there going to be any credits whatsoever from anything else in that resource?
Yeah, look, the BAM, it's as it stands, is gold. It was found by accident when the work was originally being done on the B47 and the VW, which were the nickel, cobalt, copper, PGs deposits to the south of it. So they were putting a fence across it and basically walked the fence onto, kind of a discovery. So it was very fortuitous. A little bit further to the west, we have the Limon project as well, which is a different geology. It's a banded iron formation, and that has some gold in it as well. But the geology in this area, there are lots of big structures. It's all been smashed up over billions of years. and it's had all these sort of hydrothermal fluids pumped through it, which have mineralized it in different, let's say, lots of different phases. So, and with intrusions, etc. So, yeah, very exciting. Lots of potential when we really only just got started.
Very good. Give me an idea in this area or in Canada and the other greenstone belts, what are the all-in sustaining costs for actually getting the gold out of the ground? Obviously, I'm not talking about the initial setup, which is going to be obviously X million, but how much is the all sustaining cost per ounce?
Yeah, most guys in Canada at the moment are looking at sort of 2,000 to 2,200 for all in. You know, it's again, you know, it depends on the scale of your operation. And there's some big operations to the northwest of us. I mean, they're multi-million ounce deposits, which have very similar geology and mineralization styles to us. And that's what, you know, something that we're very excited about. You know, kind of if we have similar systems, you know, not a million miles away, it just shows that you know, we're in the right territory. And it's the old adage of, you know, if you want to look for elephants, go hunting in elephant country, you know.
Yeah, if you want to look for elephants, there you go. We don't want elephants, we want gold. Anyway,
golden elephants, eh?
Golden elephants work, but not elephants, because we can't use the tusks anymore either. So there's no use in that. So from the point of view of that number you gave me, that's US dollars, not Canadian, I'm assuming.
Exactly. Yeah. Exactly.
Okay. So even if we take gold at sort of 5,000, I know you used it 3,000 in your play. You are talking about $2 billion of potential money here.
Yep, exactly.
In terms of profit. So the next question I pose to you is, if you forget everything else that's in Landor, you're worth £10.5 million. Why?
I think everybody's been looking at this project going, you know, kind of what are you guys doing? You know, I think that we've de-risked it. And I think this is just the initiation point. You know, there've been a lot of things in Canada where, you know, kind of people have asked questions around First Nations, around environment. You know, we don't have any of those problems. You know, kind of we got a great relationship with our First Nations. We've got a baseline environmental study since 2010. We have great infrastructure. You know, we don't need to, you know, fly stuff in. You don't need ice roads. You know, we got a potential hydropowered plant 10 k's down the road. So, you know, all of those things are aligned brilliantly with the project. We've also got mining permits that are in place, which is very unusual. So really, over the last decade or so, this project's just been systematically de-risked. And I just don't think people really know about it. So, you know, this is a hidden gem.
Yeah, and you've got quite the shareholder list as well with Sprott and Rick Rule and other people that you're obviously involved with as well. So, I mean, we haven't got time on this particular podcast to go through every nook and cranny of what Landor is, but I think that places it in the situation that in terms of your 3.3 billion based on the current 5,000 gold project, that's the value of the metal in the ground. You seem to be ridiculously undervalued. Obviously, you got to move forward, and you know, let's talk about all the other things in the future. As we said before we started, I look forward to seeing you in Indaba because you're going to go down there as well, back to your home. And yeah, good luck, but it looks very cheap to me at this moment in time.
No, brilliant. Kevin, Phil, thank you very much. It's been great to talk to you both.
Thanks, guys.
Okay, biggest shakers of the week. TRT, not a company I know a massive amount, down some 40%. Transsense Technologies, after they said revenues at its Source Sense and Translogic divisions continue to grow, but at a slower pace than expected due to delays in customer onboarding. While Bridgestone iTrack royalty income is now forecast to be around 10% lower than previously guided, and group revenue for financial year 26 is expected to be not less than £5.2 million, including about £2 million of royalties, with composite operating revenue growth of at least 30% through profitability will be materially below market expectations. So a bit of a knock on the financials there. That covers most of the, you know, the sort of movers and shakers we've seen. Gold and silver volatility, Charles. I mean, you mentioned it at the top of the show there. Just talk us through. We saw gold briefly hitting these record highs above $5,500 per ounce. And on Friday, we saw it sliding about 4% down to sort of low, right now near 5,000. And then silver, I mean, I was checking it on Thursday and Wednesday and Thursday, and it was around 121, as I mentioned. And then it dropped to 98 on Friday morning, with recovered back up well above 100. But just talk us through that. You mentioned the fact that there was talk about this the new Fed, or chairman of the Federal Reserve. There was also talk about some short positions being covered, or banks covering shorts. But why do we think there was such? I mean, it's volatile, but why?
Well, I think just quickly before I answer that, I just want to say on Transcends, because I was actually looking at that for this week. They're still going to say the revenue for full year 26 will be 5.2 million, including 2 million of royalty income, and they've got 1 million in cash. Their market cap is only 10 million. That looks overdone to me. So I want to say, when we record this again in a week or two, I reckon there's a bounce in there. I think it's been overdone. Now, on gold and silver, precious metals, I think that it's really simple, right? Well, not really simple, because it is actually really complicated. But the most simple part of it is that there are two
really
stores
simple.
of value.
It's gold and it's silver and it's a metal on it.
Well, yeah. And it's got atomic number of X, Y, and Z. Anyway, but there are two stores of value. You could argue that Bitcoin is a store of value, but that looks like it's in flux. So let's just rule that out for a second. You've got US dollars and you've got gold, and those are the stores of value. Now, the US dollar has been falling in relative terms pretty dramatically over the past year, and has kept falling, because you simply have a situation where the deficit is just, I think it's that the deficit is massive. The US debt pile is $38.5 trillion and rising. And there doesn't seem to be any actual plan to get a control of that debt crisis. Now, one of the key things in terms of bond yields, and whether the US looks appealing, US dollars as a store of value, is the rate at which that deficit is accelerating, and the rate at which the value of the money is coming down. Previously, you thought you might have got Hassett in at the White House. It looks like it's going to be Walsh. Hassett would have been the worst case scenario. Walsh is actually not that much better, that people don't understand it. So the market is reacting. They're saying, well, if Walsh is in power, and we say in power, he only still has one vote of the 12 on the Federal Open Market Committee. But if he's in charge, then he's going to be able to influence it, and he's going to keep the dollar much stronger than it would have been under Hassett. But the problem is that it doesn't particularly matter which person you have in charge at the Federal Reserve, because the problem isn't a monetary problem set by interest rates or buying back dollars. It's a fiscal problem set by politicians, right? So you might have short-term relief for the dollar, which brings the paper price of gold and silver down. But are they still spending way more dollars than they're going to bring in? Yes. Are they going to get control of that spending? No. So what's going to happen is there's going to be more and more dollars created, and there's going to be more and more spending. And inevitably, that means that every ounce of gold in existence is just going to be worth more and more dollars in nominal terms. But it's worse than that, because people looking for a safe store of value, where is there to turn to? I mean, the only assets that don't have counterparty risk, as in you don't have to trust anybody else, you just own it yourself, is precious metals like gold and silver. And this is, I think this is the key for gold and silver, is silver, you can look at industrial problems, you can look at the fact that people are demanding physical delivery, and backwardation, Shanghai and the US and COMEX and all of these theories. But the key point is that if you are looking to just keep your money safe, right? You just want it safe, you don't want anything else. Well, you can't really put it in the US market, because the equity valuations are just blown out. It's crazy how much you're paying. There's no value there. You can't put it in dollars, because the US dollar is just declining in value. You can put some in things like Swiss francs or the yen or whatever, but actually their economies aren't that large. The currencies aren't that stable. So where can you put your money where it's safe? And the only place is precious metals. So structurally, it's just going to go up and up. Now, with regards to the paper prices, slamming down, obviously you have that. You also have, concerns on Iran and everything else. But it's almost, in my mind, without sounding like a conspiracy theorist, it's almost coordinated. The prices are going up and up and up. But structurally, if you have a situation where people are paying $135 for an ounce of silver, for example, in Shanghai for physical delivery, but apparently it's only $95 on COMEX in the US, then surely, in any arbitrage market, you would just buy the silver in the US and then sell it in Shanghai. There should be no difference.
Any silver.
There isn't any silver. Well, this is why London
There's
was
no
shut off for a
silver
couple of
there, so how
hours.
can you buy it?
Well, you can't. You're right. So you know they're going to do lots and lots of dirty little tricks, but eventually it doesn't matter structurally. If you're looking at the silver trade and you've got a deep enough pockets and long enough perspective, how's it going to happen? Now, the silver sold in Shanghai is of higher quality than it is in the US. Not many people know this. So if you buy the silver in the US, you do have to melt it down, make it purer, and then sell it off to China. But the gap is so wide now that it's still worth doing. Shipping costs are what, $1 or $2 an ounce, like it's nothing. And so this is where we are now. We actually have two split markets. We have the paper market, which is just fantasy. It doesn't actually, it has no bearing whatsoever on actual silver. And then you have the real market in Shanghai, which is the real silver. And it's the same with gold, right? And you can see this in the earnings of the major miners. I'm not talking, like small or even mid caps like Greatland, like the largest miners. Look at what they're selling their physical metal for. It's higher than the paper spot prices when you average it out over the quarter they're talking about for all of them.
I said it yesterday, I think, when we were having a discussion after we recorded that thing for Landor, I think it was, from Landor Resources, which has got a gold project in Canada. My explanation in simple terms, or my analogy was, you've got a big bucket of water, right, which is American T-bills, okay? And this big bucket of water is huge, right? And then you've got a thimble size pot, which is where all the precious metals are. And what's happening is a little bit of the water from the American T-bills is pouring out and changing into precious metals because it wants to protect its value, is buying power. The only way that works is if this pot gets bigger. The only way the pot can get bigger is if the value of gold, silver, platinum, etc., go up in value. And that's what's happening, because there's only limited supply of silver and gold. Now, why I think actually Bitcoin is going to also go, and some of the other things like Tau will do very well over the next year or two, is because the overflow of that is going to start to come to crypto, I think, because it is a limited supply. I still don't believe necessarily it's an asset, inverted commas, but it is a limited supply of something that should hold its value as money is poured in. What say you, Charles? Do you agree or not?
I think with when people talk about cryptocurrency, there's Bitcoin, which is the trailblazer, which is its own thing. Then there's Ethereum, and then others like Bitcoin, and then there's everything else. I think the key point with all of it is just most people don't understand yet quite, and I say most, I mean the vast majority of people don't quite understand the power of blockchain and how it's going to change the world. And when it comes to Bitcoin, for example, we're actually having major market legislation is coming through the US in the next few days. And the institutional build-up, the buying of Bitcoin and what it represents is just massive. So I think in terms of penetration alone, even most people don't own gold or silver. Most people don't own Bitcoin. Most people don't actually own any of these assets at all. And all it will take is a couple of percentage swing for people to move from bonds or stocks or real estate into precious metals or cryptocurrencies, and you'll see huge upside. But I guess we'll see.
Yeah, well, that's exactly why I'm saying, only maybe you said it better, but basically a drop of water into any of these assets and they're gonna do extremely well. During January, there was supposed to be a decision whether Michael Saylor's company, Master, is it? MicroStrategy was going to be included
in the MSCI.
Yeah, or not. So was it yes or was it no?
I think it was a yes in the end, actually. I think, which is surprising. So, but I think basically this is what this legislation is about. It kind of it brings Bitcoin and other cryptocurrencies. It takes them out away from these securities and defines them as commodities, and therefore they're then able to be within the indices. So it's simple as that. And then that builds up more market structure, obviously, which has been good in terms of it's good for MicroStrategy. It's good for Bitcoin. But then the problem is, I can't help but think that when Bitcoin was originally created, the idea was it for it to be sovereign from the system, right? and now how much of it is tied up within major companies or governments is actually sovereign or not anymore. Do you know? At what point, if more than half of it is being owned by a handful of companies and governments, how much control do they have over it? Probably just as much as, as the as fiat currencies in the end analysis.
Yeah, it's not sovereign anymore, but it still has that layer that they can't make any more of it. And
that's true. Yeah.
Maybe they can't take it off you, but they seem to be able to take it off you.
Well,
I was having this conversation about quantum computing as well. If quantum computing actually does manage the holy grail of stabilizing the qubit, then a lot of these technological things will be at great risk. I don't know what the risks necessarily are, but they will be at great risk, and Bitcoin is included in that.
Well, I think that it is way more than Bitcoin. Quantum computing, the problem is the initial breakthrough won't have particularly much impact because the anti-quantum algorithms are being developed all the time. But once you have that first quantum computer, it'll only ever get better, like any technology. And at what point will passwords not work, for example? At what point will everything be hackable? At what point will you not be able to trust anything you see on the internet anymore?
Well, we're not far off now, are we?
No, but you laugh, but it's funny because I was talking to a couple of Microsoft guys, kind of quite senior actually, last week in my real job and day job, and they were talking about it, and they were saying, like, you kind of sit there kind of like laughing about the potential consequences, and you think, oh, it'll never happen. And yet, do you not remember growing up with, like, Nintendo 64 is the best games console in the world, or watching like old TV series, where like when you watch an old TV series that you watched maybe as a child, and you remember it in your mind as being the most incredible CGI ever, and then you watch it as an adult,
you watch it now
terrible.
And you think to yourself, like, what on earth was that?
But this is what AI and quantum and all of these things are going to be like. If you've got young children like I do, they're growing up. Like my 12-year-old, for example, was going through secondary school, and he has artificial intelligence on his fingertips. Do you know? There is no question to which he cannot get an accurate answer in 10 seconds that explains it better than a teacher could.
Well, accurate is the good point there. I'm not just sure it's yet very accurate.
But it's getting more accurate. You think about how it was in November 2022 when ChatGPT came out for the mass public, right? Yeah. That was, now looking back on it, that's only 2 or 3 years old, and it's awful.
It was terrible. And that's why I think the whole bit and saw network is going to work, because it basically is financially supporting the growth of intelligence and the growth of correct intelligence with the validators and everything that's involved. But quickly going back to quantum computing, you're in the process of writing an article on Delta Gold, so Delta Gold technology with the quantum computing. So I'm looking forward to what you write about that. And there you go.
Cool.
Okay. I think we've talked long enough. I'll just quickly mention 5 English teams: Arsenal, Liverpool, Tottenham, City, Chelsea, all qualifying directly for the Champions League this week, which was great to see. Obviously, Newcastle drew with PSG, so they'll go through to the playoffs. But all the other teams I mentioned will obviously go through to the knockout stages of the Champions League. So well done to them. Did you see the Benfica?
How did United get on in Europe?
Yeah, good question. What about the Benfica Real Madrid game where the keeper went up as a turban, mate? That was amazing.
Yeah, that was really just fairy tale ending, right? But you get it in football sometimes.
Mourinho's going mental on the line as well.
Mate, especially against Real Madrid as well. You know what I mean? You couldn't make it up.
No, I think it is Mourinho. I think he's come up with a lot of flack the past few years, and it's just, you could see that. I'm right. I'm always right.
He said afterwards, you were lucky. It should have been more than 4-2, I think it was.
Yeah.
Total arrogance at the end. But, there you go.
So if you like what you've heard, please do subscribe, hit the bell icon for future notifications of further episodes, and obviously also say, Charles, thanks for coming on, mate. Always great to get your insights, and have a great weekend all.
Yeah, hopefully next week we will be here without snotty noses.
popping and sputtering everywhere. Yeah.
Let's
Have a
hope
good
so.
one all.
This podcast was brought to you by Roast PR Limited. If you would like to appear on a future episode of The Sunday Roast, please email admin@thesundayroast.net.